You're listening to Fund Shack. I'm Ross Butler, and I'm here at SuperReturn in Berlin, the capital of private capital, with Todd Abbrecht, co-CEO of THL Partners. Todd, really great to see you. THL Partners has a very long provenance in private equity, I think since the mid-1970s, which is kind of really unusual from a European perspective, at least. The private equity market has changed and evolved a lot in that time. How has THL Partners adapted?
That's a great question. And first, Ross, thank you very much for having me on the podcast. It's exciting to have a chance here in the mecca of private equity to talk about our firm and more about how private equity has evolved. So just some basics about our firm. We're headquartered in Boston. We have been in business for a little over 50 years. We celebrated our 50th anniversary last year, which, as you point out, I think gives us the opportunity to talk about a lot of different versions of private equity and a lot of different versions of THL. We invest out of three industry verticals, which are healthcare, financial services, and technology. But as we might talk about, those are only interesting as they house our people and our sector-focused investment strategy, which we call the ISO strategy, or identified sector opportunities.
What do you mean by they're only interesting insofar as they house your people? Could you elaborate on that?
Of course. So because we've been in business for 50 years, we initially started as generalists in the industry. And back in the 90s, when I joined THL in 1992, the skill of the business was about getting deals done. Can you convince a seller that they should sell to you, that you're actually going to close on a transaction? Can you raise the financing that's required for a transaction? So there was real value, there was real specialness in the technology of constructing a leveraged buyout. I hate to say it, but I think virtually all of that has been commoditized over the last 50 years. And what's become increasingly important is having real knowledge of the spaces that you want to invest in, picking great spaces that you can be successful in. And we believe having the capabilities in-house to drive not only specialized sourcing, but also value creation post-close. And we have a strategy around that that we've built over time. If I go back to 2005, we were all generalists at THL and we had 35 professionals, and we were probably one of the larger firms practicing private equity, certainly in North America, maybe the world. If you fast forward to today, we have 4 times as many people, all still focused on middle market private equity, but also all specialized, where all of our people are specialized by industry or by function. And that drives the ability to be experts in all of these spaces and therefore install value creation as we move through the journey of private equity.
So your team is specialized along sector lines. How specialized are they along functional lines, let's say between investment and value creation?
Right. So on the investment side, all of our people are actually specialized by sectors or identified sectors, as we call them. Those are areas that we've researched heavily. We've landed on places where we think there are good, durable secular trends for those sectors, but also where we believe we can aspire to be the best practitioners of private equity in each of those spaces, because we've defined them and then dedicated the resources required to do so. At the same time, we have our internal operations team, the Strategic Resource Group. Those individuals are also all specialized either by product, as we call it in SRG, which is a way we can help middle market companies, or by industry. So we may have SRG team members that are embedded within industry verticals, or we have some that are focused on a specific product, like go-to-market strategy. I joke that middle market companies are a lot like teenagers. They do some things spectacularly well, and then they do other things particularly poorly. And one great example of that we see is a middle market company that has a wonderful product or service, but hasn't installed all the professional capabilities that you would like to see in that business around something like generating revenue. And that's a knowable capability. So instead of the CEO flying around the world being the only salesperson and the true champion for the product or service, we can put CRM tools in place. We can create sales operation leadership positions, all of which put the science behind the effort required to sell that great product or service.
And that's cross-sectoral. Are there other ways that you cross-fertilize your your value add across sectors?
We do. So we have 5 products that we talk about. Go to market is one fantastic element to that. We also have an M&A strategy, which is really about how do we create buildups for businesses. We focus on technology, we focus on scalability, and we also focus on talent and how we can help those businesses as they're on their growth journey and becoming bigger scale. Private equity gets a reputation frequently for cutting costs. But I find with growth businesses, we actually have to spend a lot more time installing people in those businesses, creating new boxes and new functions. That's something that a business goes through once in its life journey, not 5 times. So if we have that capability and that pattern recognition where we've seen it in other middle market companies, we can apply it to a new business that we're investing with, and it's really helpful to those management teams.
From a portfolio company perspective, then, where do you drive the most value?
That's a great question, and it's really topical today. So as we look back at a number of years, the majority of our value creation, when you break it down into the sources of value creation, has really come from EBITDA growth, helping those businesses grow, as well as building M&A platforms. Much of the industry has enjoyed exit multiple expansion over the last decade. And in fact, if you look at some research that was completed by Goldman Sachs, they talk about the 2000s being the decade where financial leverage drove returns. They talk about 2010 to 2020 being the decade where multiple expansion on exit drove returns. And to be successful in this industry going forward, to create alpha in your returns, it's going to require having a value creation motion that is helping these businesses grow faster than they otherwise would. And we believe that's what we've been doing, and it's what gives us courage that our form of private equity can continue to be successful.
From a portfolio company perspective, then, where do you drive the most value?
It's a really important question, particularly as the whole industry looks forward. For us, it is about adding value operationally to these companies and also creating M&A platforms. There's a really interesting study that Goldman Sachs did looking at what drove private equity returns for the whole industry over the last several decades. From 2000 to 2010, about that time period, a lot was about financial leverage. If you could find financial leverage and install it, it would drive returns. If you look at the period from 2010 to 2020, it was about exit multiple expansion. The classic buy low and sell high. Those aren't really sustainable strategies as you look forward. We think it's actually about driving EBITDA growth and about driving M&A platform value at our businesses. And that's an important concept. One, because it's within our control. We have those capabilities. We know how to work with those companies. We have lots of success stories and lots of data about how we can do that well.
So you've explained how you've evolved over the last 20 years into more of a sector specialist firm. Do you have any thoughts on how you may evolve over the coming decades or so?
Yeah. So as we talked about our journey from being a generalist to being more of a specialist investor, I think continually being on the bleeding edge of specialization, particularly with sector focus and way you can help companies, is incredibly important. The balance in that endeavor is to also make sure that your team is integrated. So we have specialized people in business development, the strategic resource group, our investment teams. We also insist that they work on transactions from sourcing to exit. They work, frankly, in pods or teams during that entire journey. That integration is critical to not having gaps between one team and the next, or delays or slowdowns or confusion in the value creation process. So if you take that point of view, continually improving specialization, I think is absolutely part of the journey. A good version of that would be in our strategic resource group, where we still have many people in the center who are excellent go-to-market experts, but we've taken a few of those people and we've put them into the industry verticals. So now we have operational experts that are not only product experts, but they are also sector ISO experts as well. And that specialization is going to be able to drive more conviction and more speed in our process.
So you've been around 50 years. With that perspective, what would you say the secret of private equity's success has been?
I think private equity's success historically and going forward is really about evolution. It's how do you continually advance the ball to find these interesting middle market companies, have the resources on staff to do that, know where to take risk because you know the skills that are embedded in your portfolio, and then frankly, continue to invest in your platform so that you can help these companies achieve their vision and their goals. And that may sound easier than it really is. If I think about the journey of our strategic resource group, we've had an internal operations team for 20 years. It's one of the oldest versions of internal operations in private equity. And there's a few distinguishing factors besides its age. One, it's employed. So all of those team members are employees of THL. That matters because they also have carried interest in our funds. That in turn drives alignment. At the same time, historically, sometimes in the past, our strategic resource group would be distanced from the investment team. There would be handoffs, if I go back 15 years, between when an investment was made and when the strategic resource group was brought in. That created gaps. That created misunderstandings. Sometimes the CEO wasn't fully aware of what the value or the power or the purpose of the strategic resource group was. So what we learned is we have to create one team, and we have to keep the SRG team integrated with the investment team. And another simple version of how you keep those cultures together is we have one titling structure. If you're in the strategic resource group or you're on the investment side, you have the same titles as your peers in those other groups.
They're not second-class citizens.
They're not second-class citizens. And another great image is when that team comes to our investment committee, they come both with one voice and equally weighted voices. I want the operations voice as loud as the investment voice in that meeting, which also forces them to have really important discussions before they ever get to the investment committee, so they can in fact be telling the same story or pointing out to the investment committee where there are still some differences of opinion.
I mean, you've obviously scaled significantly over the last 20 years. How scalable is it from here?
Yeah, I think right now we have a lot of the functions that are required, and I think we have a lot of the people. But I think we can become even nichier within our sectors, define them more tightly, and therefore, as you define that ground, you can create additional value through specialization. Our motion as a middle market private equity specialist is to complete 3 to 5 transactions per year. We see hundreds, if not thousands. They remain in our pipeline because we follow them and most of them don't transact. So our ability to find those 3 to 5 special transactions is, we think, very doable, even as we narrow the sectors that we focus on.
Todd, thanks so much for joining us at Fund Shack.
Thank you very much, Ross. Great to be here.